So let's analyze this particular pair together. You can see this is VIX 25 index, and we are on the weekly time frame. All right, so let's look at it. From what you can see here, we have a very strong zone here, and you should also understand that the highs of the highs of the candlestick, like the opens and the close, the highs and the lows of candlestick on the weekly time frame, are very strong zones when you go to a lower time frame. All right, so looking at this zone here, we have a zone right here where the market had been reacting previously. You can extend the zone to pick some other points around here, you can see, and then we have another zone here at the top. We have another zone here. We have another zone here, and let me show you guys something. Now look at this. Look at this. Now the market bought. Let me show you guys this thing. See, the market bought up to this level, then left a week. It sold massively to the downside. Now getting back to this same zone, the market was unable to close above this zone we have this week. The market was not able to close above this week, so it instead dropped the week at the top. Then the next candlestick, which was bearish, was unable to, it also bought, but later sold and closed within here, still in this particular zone. Then the following candle, the next week, the market sold massively. All right, so this is an indication that the market did not have enough energy to continue buying, and also this zone here was not completely broken because there was no close break and close above. That was why the market continued selling. If the market was able to break and close above here, then what the market did here would have been a retest, then it would continue buying. Now the same thing is applicable to what we have right here. You can see market has been buying around this zone, then finally broke above this zone, and then did a little, this just a kind of a one candlestick pull back. And I believe if we go to the daily time frame, we might notice we might notice a nice pullback here on the 1 hourly the daily time frame or the 4 hourly time frame. Then the market continued buying and got to this level, then it sold back, and this was a retest here with this candlestick, then it sold down. Now coming back to this same zone, you can see what the market did. It bought the first time and broke through this zone, came, still retraced and closed below it. Then this one did not go anywhere. Then this bullish candlestick, you can see it did not really close above this same zone. Then we have the next candlestick, which is still dancing around this zone here. All right, this still indicates that the market would possibly be selling again from where we have it here, although there are some little chances it might be because it might buy because of the bullish candlestick, last week's candlestick, the way it closed just a very little above this zone, very little above this zone. All right, so if it wasn't significant enough to confirm the market is actually ready to continue buying. And also from the structure we are seeing here on this time frame, we can see that the market is creating a kind of, the market is correcting. What we are seeing here looks like a correction here. Let me put this trend line. Okay. Oh, sorry. Okay, then what we have here looks like a correction. Looks like a correction. And what we can see is that the market actually made an impulsive sell. Then it started buying, creating higher highs and higher lows. Then so we'll be expecting the market to sell from here. All right. So let's just go to the daily time frame to see what happens, guys. All right. So on the daily time frame, if you zoom out, you can see the structure I just marked on the weekly time frame. You see a very nice structure. All right, and the market had been buying, creating higher highs and higher lows. I can redraw this trend line to make it like this. All right, let's put it this way. Then from what we can see here, the market now created a double top right here. The market created a double top. This is the first top, this is the second top. All right, now it is around the same zone we marked on the daily time frame. The weekly time frame is around the same zone here, and then what we expect is the market to possibly continue selling, because after seeing a double top, then we can say that our neckline is around this same zone, this particular zone here. Let me mark it. Our neckline will be here. All right, then if our neckline is right here, then we expect the market to sell down to this zone. Then after selling down to this zone, we expect the massive buys, or it breaks down it breaks through it and then continues selling. Because of this, it looks, we are seeing a continuation setup. As you can see, market was bearish, then we have these higher highs and higher lows. Then for continuation setup, we would see the market is selling through this trend line and through this zone, then continue selling to the downside. All right, so what we are expecting, that's what we are expecting right now for this particular pair. Then if we go down to a much lower time frame, like the 4-hourly time frame, you'll notice that there's a little trend somewhere here that has to be identified. Let's see if it is in line with our analysis or prediction. Let's just see VIX 25 index H4. Let's see what happens. It's loading. Okay, all right, so on the H4 we can see the market sold nicely, then it started creating this pattern here, higher highs and higher lows on this 4-hourly time frame. If I duplicate this to put it here, we're going to be seeing a continuation setup nicely. All right, so this indicates the market would be selling, would breaking out to the downside and be selling at least to this level, which we marked somewhere here. Look at the impulsive sells, then we have these corrective buys. So we are expecting some breakout from this particular pattern here, this structure here, and the breakout is will be selling, to breaking out to the downside. So this simple stuff is also a confirmation that the market will be selling. And then if we go down to, let's check the 1-hourly time frame. On the 1-hourly time frame, all right, so on the 1-hourly time frame, we have a breakout, but it's not confirmed yet because the market hasn't yet closed. I think it just opened, so we cannot confirm that to be a breakout. And then we have a little zone here, guys. We have a little zone here. There's a little zone here. If the market can nicely break through this zone and then comes back to do a retest around this place here, we'll be experiencing some massive sells from this pair. Where is the arrow line to? We'll be seeing some cells up to at least the length of this structure we have here. We'll be seeing some cells at least up to the length of this structure. Now, on all these analysis of these things I'm showing you guys, it doesn't mean that you have to hold the trade for as long as what you've seen on the daily time frame or the weekly time frame. All right, even on this weekly time frame, if you're able to get an opportunity to hold or to get an entry, let's say from here down to where we have this, you'll be in so much profit if you get your entry correct. All right, the minimum losses for this particular pay is 0.5, and let's say you enter the trade here, then your TP, you target this zone here. This is about $20 per position with the minimum lot size. So if you have a reasonable account size and you take this trade, guys, you make so much profit because this is a very clear continuation setup. All right, so in case the market, because there are sometimes the market may refuse to respect some of these zones, because now, sorry, I even deleted the arrow line too. Now the market might decide, let me zoom in a bit. Okay, the market might decide to break through this zone, then come back to this level here where we had some sales previously. All right, if it comes back to this zone, then you take your entry at that point and sell massively down. You're making more profit. Now you might be wondering why you won't enter trade here, why also you should wait for the market to get here. Once the market gets here, you have to check for some confirmations first. If you check for the confirmations and you can't find them here, then do not enter the trade. But if you're able to find some confirmations that the market is going to be reversing from this zone, then you can take the sell trade. But if you can't find and you notice the market is still buying, then you have to wait for the market to get to this other zone right here. From here, you can enter the sell nicely, and then you will see the market would be creating a head and shoulders pattern at that time. The market will be creating a head and shoulders pattern, which is also a very strong reversal pattern, and you're making more profit. All right, so just take note of these zones in the market. Just take note of these zones. All right, it is very important, and if you can follow this analysis accordingly, you will honestly make some nice profits. Just take note of the zones, take note of the market movement and the structures they form. All these zones, they're very important. Take note of them, guys. All right, so this video, I didn't want to make it that long. I think it's already long. So I'll see you guys in my next video. Stay blessed and peace out.